Good morning, everyone. How we doing today? June 11th, Thursday, June 11th. We're doing this financial news a little early. We do them a little early on Thursdays because we have a 7 a.m. interview with Jonathan Twanley. So I try to get these done about 6:30 on Thursdays and then 7:30 a.m. the other 6 days. First and foremost, want to thank all of you for the thumbs up. Asking for the thumbs up really helped. We set a record for any of my videos at over 135 thumbs up for yesterday. So thank you very much. That was very nice of you to do that. Also, 83 comments. A lot of you are daily viewers, and I appreciate each and every one of you. Also, remember that we are going to do a thank you live stream Saturday at 8 o'clock Pacific just for you. If you have questions you would like me to talk about, you can get those in ahead of time and by putting them in comments. I will be reviewing Wednesday's financial news, Thursday and Friday to see who has questions and do my best to answer those for you as we get that session going. I think we had 5 or 6 questions already come in, and I'm going to start with those and then do my best to answer the others as they come. So it is Thursday, so that means we need to talk about the unemployment number. Thursdays have become, they're not a lot of fun, right? Because you're talking about another 1.5 million folks filing for unemployment. Continuing claims, which is the number we should be talking about a lot more now, came in at 20.9 million. Yes, that is down about 340,000, but still over 20 million. We do have some states coming back online, California and New York, so we will see if continuing claims takes a big step down in the coming weeks, which we can all hope for. Nobody wants to see continuing claims over 20 million. A couple of quick thoughts. Today is going to be a down day. It's certainly setting up that way. There's every chance that the Dow is down 3% today. I wouldn't rush to be afraid or fearful of this. We have been at all-time highs. We are stretched on the price to earnings ratio. I think what we need to figure out, and we will only be able to figure that out over the next week or so, is the market down today because the Fed Powell was kind of, he was kind of down a little bit about what's coming up. I would say realistic, but still down compared to what the market was hoping for. Is this perhaps down 3% because there's been reports of spikes in other states that haven't had one? Texas and Florida, Arizona come to mind. Or is this the retail investor getting washed out? I did a video Wednesday after market closed about, I forget his name already, but somebody that was pretty arrogant, being very disrespectful to Warren Buffett. And in that video, I said, I just saw the top. That reminded me of something I saw in 2006. There was a real estate agent, it might have been a broker, 28 or 29, and he had just bought a $400,000 exotic car, and he was in Bakersfield, California. I remember seeing that. It was like one of 8 produced in the world, and he got one, and I'm like, wow, something is way off when we have real estate brokers buying one of 8 exotic cars. And sure enough, looking back now, that was, again, a clear sign that the top had been put in. And again, I still can't believe that quote from Wednesday, losers take profits. I mean, how does it feel today? We're going to see. We're going to see if there's margin calls going on today in the Robinhood accounts, because that's painful. And again, as I've said in our book and I've said on this channel, I've been there. I remember. I don't think I was ever that arrogant, but I was cocky, and it did not end well. So in the end, everybody has to learn once. So we'll see. The Fed did say they're not looking to raise rates. They're not even thinking about raising rates in anytime soon. So we can count on low rates to the end of 2022. The 10-year is back down. It peaked this week at 0.95. I was getting a little nervous as it was heading to 1% because that would ultimately impact mortgage loans. It's now down to less than 0.7. I think as the stock market sort of comes in, the rates are resetting. that was getting concerning. So we will see where that's going. High-end buying in China is something to watch. They are talking about they talked about Tiffany's being up 30% in April and 90% in May. I do think the high end is going to struggle. I believe the U.S. consumer behavior has changed, at least in the short and medium term. We will see. I do believe their earnings have to come in, have to be adjusted, but we shall see. I didn't realize this, but it looks like China makes up 35% of the high-end purchases. A little bit more than I expected, but again, it's an important market to talk about. Wells Fargo's in the news today for kind of, I don't know, all the wrong stuff. Something I caught yesterday is they are saying that they likely have to increase their bad debt reserves. If you remember from their last earnings announcement, I shared with you, we're going to see if this was a one and done. I think it was 8 billion they set aside. It might have been 7, and I'm like, okay, we're gonna see how bad this is in the next quarter. And as an accountant out of college, bad debt reserve is something that we use during times of stress to basically manage the bad quarters, and then help us accelerate out. So this is not to be unexpected. In fact, if I was doing this 25 years ago, it's a pretty common thing, but it's not a good sign, right? So they're going to be taking down earnings that are reported because they're going to take another, billions of dollars of bad debt reserves. And then this morning, I just heard there's an analyst out at I think it was J.P. Morgan saying that Wells Fargo should cut its dividend. Woo, that would be bad, right? People look to financial institutions. All of them have been telling us, "Don't worry about us. We're good. We're good. We're good." And now, if one of the big banks come out and say we're going to cut our dividend, I think it's at 50 cents or 51 cents, and they're talking about a cut almost in half. That would be a sign of stress to come. And you got to remember, Wells Fargo, we've talked about a couple of times now, right? They stopped basically jumbo loans. They stopped equity lines, and then just recently they got out of basically used car lending. Right, so they are retreating right now pretty substantially, and then they're going to put in some more bad debt. So they see pain ahead. There is no doubt. Looks like all the stimulus talk need all these videos on YouTube. I don't know if they flood your channel, but they flood my feed when I'm working out. All these stimulus videos need to stop because it's likely not going to be even a discussion until July. So all these daily stimulus videos are just to get your clicks, and the people are printing money. So it's pretty foolish. So again, the House passed a $3 trillion bill, debt on arrival. The GOP is like, basically, ooh, that unemployment number was surprisingly good. Let's see what happens in June. And then they will talk about a package. I do think a stimulus package is coming. I think it will be it certainly has to be for hospitals. I've said that a few times, but we'll see what else. Maybe schools seem to be need some money that maybe for, I don't know, whatever it's for, but it will certainly happen. I just think it's going to be much smaller than most people expect. More proof that densely populated areas are seeing an exodus. We've talked about it in New York a couple of times. Now we have San Francisco. Not only is San Francisco's rents down, we've talked about 9%, almost 10%, but now we have people selling homes in the city, which, can you guys believe they're $1.5 million? That's the median price point in San Francisco. And they are buying spots in what is called the wine country. You can think of Napa and Sonoma and things of that nature. Obviously, this is skewed towards the wealthy, but the wealthy are getting out of Dodge, and that's going to have an impact on San Francisco, no doubt. They're going to put their houses up, they're going to sell them, and if it happens in mass, San Francisco is going to see price reductions, but the wealthy are going to where there's space, right? Space is good. We've talked about that a few times now. So it's happening, and there's going to be ripple effects from that. And just like in New York, the wealthy have options, and they're getting out quick. And there's going to be a air pocket that we're all going to be paying for. So watch out. Looks like GrubHub is tied up with a European company called, what are they called? I wrote it down, but I can't find it. They tied up with a European company. So they're going to have a global brand for food delivery. It looks like to me, I think GrubHub played Uber. I don't. We'll hear more about this over the next couple of weeks. But what I'm hearing in the Valley is GrubHub actually, or Uber, excuse me, actually was willing to pay more, but they wanted some restrictions, and GrubHub basically slow played Uber to get a better price from this European company. Forgive me, I didn't. I wrote it down, but I can't find it. Too many notes. Anyways, last thing to talk about is Authentic Brands. CEO is out basically. I didn't know who Authentic Brands were, but basically they've been buying retail companies that are in bankruptcy. Ones that I've heard of were Forever 21 and Barney's. And basically I copied this note because he's getting excited. This is a classic buy low, sell high individual. And I'm impressed. He's basically saying it's almost time to go shopping. So if your business has historically been buying distressed retailers, man, you're going to be buying stuff hand over fist for the next 6 to 12 months. So there's a model for you. So Authentic Brands, somebody to look into, somebody to follow. It'd be interesting to see who they buy because they're going to have a lot of options over the next 6 to 12 months. So that's what I got for you today. Again, I think the market is going to go down. I started this video before the market opened. It's going to be a down day, probably a 3% down day. It really is why. That's what we have to figure out, and you really can't do that in a day. Is it the margin calls on the retail investor after the arrogance of Tuesday's video? Is it Jerome Powell's negative talk about what is coming? Or is it spikes in other states? We'll see. So in the end, we're at all-time highs. Enjoy it. It was a 40% rise or 50% rise from the bottom. You got to give some back. You can't have all up days. So, chalk it up to giving something back. It's not doesn't frighten me, I guess I would say. So at the end of the day, have a wonderful, wonderful day. Remember, if you want me to address some questions on Saturday at our 8 o'clock live stream, leave the comments below any of the following 3 videos. The June 10th financial news, today, June 11th, which will be up momentarily, or tomorrow's when I record it. I will use those 3 videos to search out questions, and I'll answer those questions first. All right, everybody, take care.